And if you look at some of the names within the NASDAQ right now, some of the strength that we're seeing in old line tech, I mean, what was some of the leadership yesterday? It was Intel, it was Microsoft, it was Cisco. When I look at these names, Scott, I think there's plenty of room to the upside because we're not talking about the year 2000 where you look at PEs that are absolutely outrageous and you say, how do you ever manage to say that's a stock you can buy? I look at the guidance that was put out by Intel, by Microsoft, and by some of these other names, Apple, throw that one in there as well. It's unbelievable how strong they are right now, and the growth in the categories where they are is unbelievable. And because of that, I think many of these names are still far too cheap.
I mean, so it's pretty remarkable, Weiss, that the stocks that you like are ones that have had tremendous performance, yet you still feel that there's upside ahead. You know, Microsoft up 30% year to date. Netflix up 89% year to date. Google with its own, good year, good year, and you still say there's more room to run.
Yeah, and interestingly enough, not only do I agree with Pete completely, and Microsoft may be one of your names as well, not only do I think there's more room to run in those, I also believe my downside's more protected in those than if I went into other names that were sort of more wishes rather than performance. The execution from all of these companies, including Netflix's last quarter, has been phenomenal and deserving of the run they've had. So we're still in a growth environment. Microsoft, very key to growth in the U.S. and globally. Netflix, same thing. Google, same thing. Google stands out alone, particularly with the news from Yahoo today that they're going to be mining emails to sell the information to advertisers. Google stands alone in that regard, and they still are an absolutely critical, I think, the most critical technology that we use on a day-to-day
Morgan
basis.
Stanley jumping in big time on Alphabet today. They raised the price target to $1,500, Doc, and $15. Their $1,800 bull case, 45% upside for a variety of reasons, strong core and Waymo, among other things.
Yeah, well, I think a lot of folks have got to focus on Waymo now because of the things that were going on with Tesla and so forth. Some of the whether it's just Mr. Musk himself or meeting these lofty targets and so forth. So Waymo and obviously how that plays with Google and the rest of these guys that are in the self-driving cars, great opportunity there. I'd say, Judge, one of the areas that I was really interested in was Yelp, because when I look at stocks that have outperformed like crazy, I'm looking at 100% on Grubhub. We talked about it yesterday. 55% out of TripAdvisor and things like that. And then you look at Yelp, it's up 9%. It's barely ahead of the S&P. And I think that one has room. That's one of those NASDAQ names that I would say I could buy that one and feel good about it here rather than chasing some of the ones that have had the unbelievable outperformance.
Yeah. Jenny, I mean, why don't we just call this a let's not make it too complicated rally? I mean, if you look, the NASDAQ's up 17% year to date, right? It's so far outpaced everything else.
Right.
Some of the huge gains that I already went down the list of some of the NASDAQ 100 performers year to date, whether it is Netflix or Amazon, but there are so many others. The NVIDIAs of the world, Intuit's, Illumina, Adobe. Why don't you stay with tech?
I think you can stay with tech, and I think you can stay with tech in a safe way. Not everything's trading at infinite multiples. Some things are cheap, like Qualcomm's still trading at, whether you look at analyst expectations or management's expectations for earnings, is trading at, call it between 10 and 16 times earnings. They've got a 3.5% dividend yield. They will be the beneficiaries of 5G. You can buy that. You can buy Applied Materials.
It's one of your top 10s, by the way.
It is.
Qualcomm. It's up 11% in a month.
I know.
In 1 month.
I know. But, it's not up 17%, and it's basically stagnated for the better part of the last 14 or 15 months. So that 11% in 1 month is a lot of catch up. Yeah, there's a lot to buy in tech.